Good morning, traders. Welcome to our daily webinar, to our London session. We already had a daily webinar, which is earlier. We do daily about 2 hours earlier. Then we do this session. Then we do the New York session. If there's anything between now and New York, today there will be. That is 1 p.m. my time. That is before New York open. We'll be trading the news. We'll be trading the pound. Then we will do the New York session. And yesterday, after the New York session, we went and we traded the US dollar. Today we'll go and we'll trade the CAD. It worked out well because we traded gold and they made money. Right? The traders, they made money in the gold and they made money in this one. Those of you who took this, they all dropped. So you see that drop there, that sudden drop, you close it anywhere here. Once it breaks the slow, you start looking to take profit. We do that in a much lower time frame when we trade the news. So you manage to take profit out of it. That's just to give you an idea what we do. So the question is, how do you do your analysis? Let's take, what was it? I think you had the Aussie. So let's go on the Aussie dollar. Right, before you do any analysis, you do top-down analysis. So if you want to understand, let's say somebody said, hey, you're going to this address, right? The address would have the house number or the lot number, depending on where you're going. It would have the street name. It's going to have the city or the region you're going to, and then it's going to have if you're in that country or out of that country, right? So you would have to start with the bigger map. Where is the bigger city? Like if I said you're going to, I don't know, St. Petersburg in Russia, you would have to go get a map, find where Russia is, where St. Petersburg is, and then find the street and then find the address, right? You can't just suddenly take the map and say, okay, let me find the address. Let me find the house, right? You can't find it without that. So it's the same thing when you're trying to find a pattern, you start from the bigger structure, start from the weekly. Now, the weekly is not for trading. It's just for you to understand where you are in the bigger structure of things, right? That's basically what you do. So if I look at this chart, I'm interested. You can even forget about all of this. It might be relevant in most cases because by the time you get to that analysis, your trading is going to change. You're interested in where's the lowest point and where's the highest, right? And in this case, this here, we broke out of this. So this is one move up. And now we're coming down more like this. So the thought process is, how long can this happen? You don't know. This is an unknown factor. But what you know is when this is over, you're likely going to get this. I can show you it. Take this, for example. See this piece here? This is an unknown factor. But once this is finished, you get that. This happened. Then this is an unknown factor. But once that is finished, you get this. This here comes, this could be unknown how long that is going to take, but when that is finished, you get this. See? So your thought process, I want that trade. That's a trade that will double my account. And literally that single trade could double your account. But you remember, I'm in the weekly chart. You're not going to buy the Aussie now and wait for it to get to that top. You can do that if you're investing, if you're not trading, right? If you're not using leverage, if let's say you have $1 million in the bank and you were like, okay, wait a second. You said Australian dollar will get stronger and the Australian dollar to the US dollar now is 0.6. Here's what I'm going to do. I'm going to convert all my US dollar to Australian dollar right now. And I will wait for a year or 2 or 3 for this to get back to this top here. So even if it goes down, that will not affect you. But when it does this, okay, great. So you take care, by the time it get there, you double what you had. So now you have $2 million. 2 years or 1 year, you have $2 million. Great. But you can do that more effective. If you're trading like us, which means you're borrowing money to trade and you have to pay for that borrow money, you can't afford to do that, right? So what you're going to do is you're going to go inside of this one. Now that we have decided that this would eventually go up, we want to see when this is finishing. So you know you're in a big correction here. That is very important. So you go to the daily, and the daily is showing you what the correction is doing. So you always look, where is the top of the correction? That's the top. And this was the last low that we know. But if you look at it, we kind of can't come down. We make a correction, we drop, we made a correction, we drop, we made a correction, we drop, we made a correction, we're dropping. At some point, we might even make a correction like this. And we could probably drop again like this. We could probably go back up like that. We could probably drop again like this. Remember, I said at some point, this is going to start to go back up. Here's one of the rules you will have to understand. Most times they will break the low before they go back up. See, so what I'm saying to you, when it breaks this low, you start looking for buy setups to get this one. Now that one is not going to go in a day. It's not going to go in a week. It's not going to go in a month. So you wouldn't be buying one trade. You would buy, I don't know, 100 trades by the time you get to the top there. But 100 trades making 1% on every trade would give you double your account. See, you will probably even be selling at some point. When you see that there's a bigger correction forming, you will get sell setups. If you follow us, we do that. We do buys, we do sells. We do both sides. And depend on the time, we have traders who make 20 trades a day. Right, so 100 trades in that thing, they will probably make about 1,000 trades, up and down. So we have traders in the room who trades in 5 minutes and make that amount of trades a day, from 5 to 20, pretty easily. Right, if the lower the time frame, the more trades you get. Of course, you will make less percentage per trade. Right, and you may risk much less than you would risk, not 1%, but 0.5 or 0.3 or whatever. But the idea is that if you understand where you're going, you can look for that direction to trade. So right now for us, you look at the 4 hour and you said, okay, since it's going down, this was the top of that last correction, right? So once it makes the top of the last correction, it starts to go down, you can sell, you can sell, you can sell, you can sell. See, we had sell setups there. You can sell in here, we sold in there, but that's a lot of break-even trades. You will get a lot of break-even trades when you're in that correction. We sold in this, we got a lot of break-even trade. We sold it, remember yesterday, 2 break-even trades. It still dropped. But when we go in the 1 hour, there was one more trade that you probably could have put that made profit, but I wasn't there when that happened, and I'll probably show you, is that you're in the flag. So you see how it looks different. This is a correction of its own. This drop, you get that flat, this drop, you get a flat here, it's dropping still, right? So we're making another correction here. Guess what? That's another sell setup. It will sell to break the low, and then you don't know how far it's going to go after the low. It could go much further. It could go 300, 500 pips below that low. Because on the weekly, if you go back on the weekly, I can tell you how much more we have to go to break this low. I don't think we're going to break this low, but we can come back all the way to the bottom there. And we have about how much? We have about 1,200 pips to go. So this can drop 500 pips and then go back up. See this drop here? See that drop there before they go back up? So you don't know whether it's going to do that. I'm not telling you it's going to do that. I'm saying, well, you'll take every trade you get and you'll manage them. Either you get break even, you get a small profit. You get break even, you get a small profit. Avoid taking losses. So now if we get this correction here and it starts to go down, good, we will get a sell setup. We'll put a sell here. We'll go with that trade. If it goes up higher, better for me. Right? If this goes higher, let's say it's probably start doing this and it does this and, you know, do this and do this and do this and do this and we do this. And I'll be selling it from here. So I'll get this trade. That'll be a much better trade for me. See? That is strategy, how you're going to trade it. First, you need to know where you're going. Then you're going to try to get, what's the strategy, how you're going to get there. You're going to walk, you're going to fly, you're going to drive. That's a strategy of how you're going to get there. You find the address, you know your direction. Now, how you're going to get there, that's where your strategy comes in. And then while you're driving, flying, walking, swimming, you still have to take caution. In the plane, they will tell you what caution to take. You're in the car, you know what caution you have to take. That is called money management, risk management. And then trade management, you still have to go through all you have to, you know, go through the airport, or you would have to go through stoplights or all of that. On the way now to that, you're still managing your directions, right? That's the money management, that's the trade management. You're on the way, you know where you're going, everything is great, you're already in the trade, you're already in the plane, or you're already in the car, but you still have to manage yourself. You don't just close your eyes and say, okay, I'm going, right? You still have to be cautious of what's happening around you and what you're doing. The same thing, that's your management of your trade. If you do that, great, you're going to survive and you're going to get to where you're going, which means you're going to make a profitable trade. That's simple. It's not complex. Anything you do in life will follow those set of rules, actually. Almost anything. So treat this the same way. Analysis, strategy, money management, trade management. That's basically what you would have to do. And if you do that correctly, you will be really good to go. See how easy it becomes now? So what I'm showing you here right now, what we do in our trading, what I'm showing you is the analysis first. Then if there's a trade setup, we will show you the trade itself. We're not going to give you the strategy. My traders know the strategy, so I'll just say we're buying or selling here, right? I might not even give you stop loss. I might not give you, because then I will have to go through the entire strategy with you. And then I will tell you trade management. Well, trade management, we just do it. You see we do it, that's all. This trade is closed, this trade is in profit, this trade you take profit around this area. So you will understand. The rules for it, you don't know. Right? That's basically it. We have specific rules for the trades that we're going to take. And a lot of it would depend on the patterns, right? What pattern you're identifying in each one. Take Euro, for example. Now, everybody was here. You remember we're selling it to do what? Break this low. When it break the low, what you do? You take profit. Why? Because we were in this specific pattern. See how easy it is? It's not that complicated. The reason we would take profit here is because you notice they drop, they go back up, they drop, they go back up, they drop. The likelihood is what they're going to do, go back up. A lot of it is common sense as well. It doesn't have to, but when you do this often and you start figuring out the patterns, you can see it. You literally see the patterns. And it's like anything you do. I don't know if any one of you play cricket. There's a lot of Indians here, Pakistanis here, all of you, Australians here. You guys play cricket, right? You know the speed with which the ball is coming to you. And most times, get what? You're just firing. Most cricketers will tell you they really don't see the ball. It's not that they're looking at the ball expecting. They look at the bowler and then they fire. Literally, the speed with which that ball is going and the distance in which it's traveling is so fast that your brain cannot register the ball as you seeing it. It's more of an intuition. It's more of a game where you play. But you can tell where that ball is going by the way the bowler is bowling. You look at the bowler and then you can tell where it's going, right? You literally, if you're trying to say, okay, well, I'm going to watch the ball and then hit it, most times you're going to miss, right? They practice so much that they can do that with their eyes closed, almost. If they can only watch once the ball is delivered, the rest of it is skills and intuition. The same thing you do. You practice this so much that you learn it. You see the patterns. You see where it's going to stop. You see how far it's going to travel. You know where your entry is. It's like anything you do. And here's the thing. There's no other method that allows you to do forecast. I've studied all the methods. They don't do forecasting. They just use it as a strategy. Rarely there are methods out there that allow you to forecast the charts, and not only in one move, but in 3, 4, 5, 6 moves. We can forecast a chart for 5 years ahead. And 99% of the time, let's say 90% of the time it's going to be accurate. I showed you the one in the Euro Yen yesterday, a forecast that was made, I don't know, 5 years ago or 7 years ago, turned out to be perfect. The same thing here, because the behavioral pattern of the charts are there, right? They tend to behave a certain way, and that create patterns. So that's how you should do your analysis. Let's go. Let's start now. That was 12 minutes, a little more longer than we wanted. Okay, so let's start. We're going to start with the dollar. We're going to start with the charts that we identified this morning because we already finished the daily webinar. So what we looked at is we looked at this and we said silver would likely drop. All right, remember yesterday we were looking at this and we we're saying this would either come here and go back up or come here and make a flag and drop. Well, it didn't make a flag, but if you were in the trading room with us yesterday when we traded dollar index, we actually sold it, right? There's a specific strategy for that. We don't need a flag. We actually sold that and the traders closed that trade, right? So what we're looking for now is a flag. There was a small flag here. You would have got break even in that trade. So we put an entry here. Now, if this becomes a bigger correction, which means if this started to do more like this, and so we will pull this, we'll let it go back up. We'll sell it from this level and good. The reason if it drops here, you'll take it because there is some correction in here, right? That's a lower degree. But basically, this could drop now. We wanted to break this low and then go back up. The only time we change that analysis, the only time you change it is if this actually goes up here and make a flag. If it goes up there and make a flag, guess what we're going to do? We're going to look at this and say, you know what? We probably have an expanding flat there. So this would be 1, 2, 3. And anybody want to tell me, not my traders, any one of you want to tell me what it's going to do next? What would be your forecast next? Anybody, up or down? Just write up or down. likely drop. See, at least one person, a few people answer and they got it correct. There's a delay. I see a couple of you answer. Yes, likely down. Make a new low, and then we look for the reversal. See how easy it becomes now. You're here 2 days with me, and you guys are doing forecast already. So basically, this is how you look at it. You take the pieces you have, and you project what it could build, what you can build with what you have. And there might be more than one variation. There might be 2 or 3 variations of what patterns you know exist already that can make, that these pieces you have can make. We can make an expanding flat, or we can make a flag here and drop. And both of those would be correct patterns. You just need to confirm them. So the sell is okay. You don't have to worry about the sell. It will never tag you unless it drops. There's no fear to that. The good thing about wave analysis is it takes away your fear. A lot of the traders who joined my group were actually good traders. Their biggest problem was they were afraid of the charts a lot of time because they don't know what it's going to do. They're in very good trades, actually. The trade is going their way, and the minute it starts to pull back a little, they get scared and they close the trade. And then what happened? Well, why you close? Well, because I don't know what it's going to do. I don't know where it's going next. And I thought that move up could come and take me out. I'm like, no, it's just making a small correction. You would understand that if you understand patterns, or you would understand when it's not making a correction, right? So this is not a correction. Oh my God, this is actually going to come and take me out, right? Because of where you are in any given pattern. So it takes away a lot of the fear in trading. Even when you get a losing trade, you understand why that was a loss. You literally know sometimes that it could come back here and take you out when you take the trade. You're aware of the behavioral patterns. So let's go. Wait for this. This morning when we traded, we weren't expecting a big pullback like that. Let me show you guys. I wasn't expecting it to come here. I was expecting this to come here. This was what I was looking for. And then trade that down. Now that it comes to this level, that change. We're going to look at all of this as some kind of a channel. And this is your first impulse up. See? So now what you're going to do, that's the first impulse up. You can't really trade the first impulse. But what if we're making a running flat that looks like this? Not that I think it is. I'm just trying to stimulate your brains a little more into understanding pattern. What if that is it? Then this would drop. Now, rarely, that would be a very, very rare pattern. So I don't think it's doing that. I think we're making a sharp one there. We would likely start to see this consolidate here. And depending on the depth to which this comes, we will either decide to buy it, or we will wait for it to come, go back up, and then we'll wait for a sell. A lot depends on that. If you come this afternoon, you'll probably see which one we get. For now, you can leave this entry here. Nothing would happen to that. Gold, you guys remember, we sold it there. We sold it here. We sold it under the low. We closed the one under the low here. We re-entered here. If you remember that, we closed it here. We re-entered there. Right? It's still going to break the low. So we thought this could make a running flat there. It's expanding already. And then we're expecting one more drop. If it makes a bigger correction, no problem. We'll still sell it. We'll sell it to first break this low and then break this low. So you see, this thing is going up, but we knew it was going to come down. We're actually expecting a downside. So you get a flag, confirm your downside, you take the trade. Pretty easy. Euro. I think you all saw this. This is classical. We took that trade. It's here. We are actually in a buy now from this morning. That is this morning trade. My trader should be in this buy. We're going to watch it to break this top. So we want this to go here and break that top. It could go slow. We know this could go slow. You don't have to panic. That might even pull back and then go pull back, and it could go like this. So it could go slow, but when it gets here, we will close the trade. It's a very small trade. You're going to close it, but then you might make another drop. Now, then in very rare cases, we didn't take it for that small move. We're not trying to take that. In rare cases, this could take off because this came back so deep. There are rare patterns where if you're going for a big impulse, you will pull back that deep into the correction will pull back that deep into the first impulse. Most times when you do that, you're creating a flat. But because of where we are in the daily structure, in the weekly structure, in the monthly structure, in the yearly structure, every buy setup will take, regardless of whether it becomes a break even, a win, or a small loss, right? Because this in the next hour could end up somewhere here with one very sharp big spike, and we don't know why it's going to happen. Of course, the rest of the world will go and start to figure out who said what and who did what, and we are telling you, well, somebody might say something or somebody might do something. So just in case that happens, we're already in the buy. If they don't, it becomes a flat, we sell again. Shall we see this? You don't have to worry about whether they will do or say. You just trade it. So right now, this is a trade for us. It's a very small trade, like I said, and it's going up really slow. We're not anticipating big move up. I think it's going to probably work its way up here. Put it to break even. If we really see it not, it's really, really slow, it's not going, and then we'll decide what to do, take it off. If you don't like it, you can take it off. That's an aggressive trade just in case it takes off. If you can see that it's slow, it's consolidating, it's not taking off, you'll just take it off. Basically, we'll just take it off and move away from the computer. Pound dropped. We put this entry over here because we made an assumption that I think yesterday we sold this also in the news event, but we took break even because it started to drop before the news. So based on our strategy, we had to move away. So we got tagged and then it started put back and just close it, right? Because it didn't go where you wanted it to go. So now we're making a running flat here. We're making an assumption that that is a running flat. And if we're correct about it, it's going to drop and break this low. So let me go back and show you the pound where we say we're going to expect it to come and break this low and then go, right? So this is the pattern. It's classical, right? You look at it and you said, well, I've seen all of this before. You got an impulse, you got a correction. You get an impulse, you get a correction. You're getting another impulse. And from this point, we might even start the reversal. It's possible. So when we break this, how far this is going to go, we don't know. We'll see. It doesn't matter. Once it breaks the low, we'll start to look for buy setups, which means we're going to still sell. It doesn't mean we stop selling. We get a flag, we sell. But every buy setup we will take. So there's probably one more sell to break this low. I think we'll do it. So you go into 1 hour and you're like, okay, they'll probably go break the low, take the sell. That will be a single drop. And remember, now we're in the 1 hour. On the weekly, this could be 200 pips down. And on the weekly, it's going to just be a very, very small move. So this is a trade we'll take and we'll see where that goes. Aussie. I think we got a little too cautious on the Aussie yesterday. We probably should have kept it a little longer, survive it, but it doesn't matter. You have another sell set up here and it will break the low. Now you have to be very careful with this one because once you break this low, structurally, the pattern is over. It doesn't mean that the impulse stops. It means by theory, that pattern is completed. It can still go 300, 500, 1,000 pips before it comes back. But the minimum is breaking the low. How far beyond the low? There's no rule to that, right? So that's a good sell setup. It's an aggressive trade. You have to manage it. We can put that as an aggressive sell now because you would have to manage it very carefully. New Zealand, we're waiting for the same thing. I don't think this is enough of a correction. Let's wait for more correction. New Zealand doesn't have to go anywhere. We already broke the low. So any flag here, we'll just sell and hope that it goes. So New Zealand, remember, we had this one. And then because this went up to the top, we said there are two options right now. It could still be that, or it could be this comes here, go back up there. Because of the depth that it comes, we will always assume that it's making a flat, come here, go back up there, make this flat, drop here, probably go back, make a bigger running flat, and then drop. Well, now it proves that no, this was just a very deep pullback into it. And every time you get a deep pullback in that, you would think it's making a flat here. You have to do that. That's part of the rule. That possibility exists, which means you would look at both possibilities. A sell was here. If we get another consolidation here, we'll take a sell. I would not sell it here now, but if we get a consolidation, we'll do that. Yen, you can buy if you want. Like I said, starting from this point, you can from here, and so you can buy if you want. I would prefer to wait for the sells in the yen, right? So right now we don't have a sell set up because this looks like it's making a flat. It looks like it's going to go up here and probably come back here, make a small flat, and then you have a trade to the upside. If for any reason I think this would become a sell rather than upside, we'll consider it. But right now it's making a flat for upside. Swiss, you can buy the Swiss. I think we have a flat forming there. So this one actually didn't it was supposed, our thought process was it's going to come here, come back here, and then go. But it went out and it made this. So we have to relook at what we think of this pattern. We might even have to relook at it with the previous patterns that we had. So we might have to relook at it not only based on that one, but based on these previous patterns we have. So maybe part of this is of the previous pattern. All right, so we'll have to relook at them and see whether we might have missed a piece in there, because now it's breaking out and it's looking upside. It doesn't matter, we will trade it up now. We have this impulse down. You have a 1, 2, 3. I expect this to come back here, and then we're looking for a buy setup. If this makes a flag here and drop, we wouldn't sell it until it breaks that low. Let it confirm the downside. So it might be an expanding flat in that case, and we'll still go back up. So the buy is something we're going to take. CAD has a very similar structure. See? You get one sharp move, you go back, you're getting another sharp move, and then this is a very, very aggressive trade in the 5 minutes. If anybody wants to trade it, you would have traded in the 5 minutes, and you probably would have closed it already, because on the 5 minute, that was a small flag. This was a small flag, sorry. This here was a small flag, it dropped there. If it stays this much here, you have to close it. Right? This is not going anywhere, that's consolidation. Right? You want it to drop like this. It has to drop at the bottom, not consolidate. If you're in a small trade and it consolidate, close it. But that was it within the trading room. We don't normally take the trades. I have some traders who trade very aggressive, so I showed them where that aggressive trade could be. If you haven't closed it, wait for a pullback, close it. So we're expecting this to pull back like this, and then I don't think we'll buy it as yet, because we're still within this consolidation range. We're still within this range. And this one we thought would come. At this point, we thought it could either break the low and go, come here, come back here, and then go. We broke the stop. That means we're looking for a different structure. I think we have a running flat here. There's a possibility you're looking at this as an expanding flat. There's a possibility you're looking at this as a possible running flat. In any case, we're not buying it there. There isn't the buy setup you should take there. Go back on the hourly. If I'm going to buy this, it has to be above this stop. And it has to make a flag there. That would be a buy setup. As it stands right now, there's no sense. The risk to reward is not good in buying it to the top. You've just increased the risk. You buy from the bottom going up. So we'll take this out. We'll wait. We don't have anything there. Euro yen, by the way, if it makes a flag, you can buy. We'll come back to all of that afterwards. This was a buy this morning. We took an aggressive buy here because we expected to break this top and that top. It's kind of pulling back on one thing. You don't have to worry very much. It pulls back a lot. Right? So we're expecting this to go here, break this top, and then come back down. Right? You'll get 1, 2, 3. You'll get 1, 2, 3. I'm expecting it to be a running flat, which means we definitely will break this top and we may break that top. If we break the top, it's a running flat. If we don't break that top, it's just a regular flat. On the 15 minutes, it just tagged you and pull back a little, no need to worry. You see they're going up, pull back, they could keep doing that for a while. If this trade doesn't go, we will close it right in this range for about 5-10 pips loss. So you don't need to worry very much about it. The reason we're taking it is we're looking at this running flat. And we broke the top of the running flat. So by theory, you fulfill that running flat. The impulse already broke the top. But we are not only taking it because we think it will break the top. We think it's going to break this one and maybe break that one. So we see that as a possible good trade to go with. Right? Because there is somewhere to go. And that means you can take it. If there was nowhere to go, then we wouldn't take it. There's a lot of the yen pairs we're not trading because it can still go some more. But there isn't a huge target to go to. There isn't enough risk to reward to take the trade. Most of them have broken the tops already, so the risk has become much higher. This one is still valid. So we'll see. You'll stick around, you'll see what happened to the trade. Aussie yen, sorry, this is one we didn't take. It's going to break this top as well, but you see there's nothing to go there, so we decided we're just going to leave it alone. We have a trade in the Euro CAD. We're looking for a sell setup here. So you remember we sold the Euro CAD yesterday. We sold that. All of you remember we sold that. It dropped. You could have closed and re-entered here if you did. And when it breaks this low, you close the trade somewhere here or you close it here. So if you take it, that would have been your profit. Now it made 1, 2, 3, and it's here. Here's the thing. I don't expect this to take off to the upside because we're looking at this pattern and it looks good for downside. I think we can make an argument that this looks great for downside. I think it should go down some more. There's only one thing we can say we might get wrong. Let's say if this was the correction. I don't like that as a correction. That's why we didn't put that as a correction. But let's assume we have it wrong and that is the correction and this is the low. Then this could be a correction for upside. And if that happens, what is going to happen for the trade? You would let this break out, you would let it make a correction here, and then we'll relook at it and said, okay, we have this and we have this. Let it come back to this top. Take this trade. If it stops there and come back like this and we get this, then we're going to be buying it. If this takes off, good for you. So until that happened, you're not looking for the upside. You're expecting it to go down more. And I like this pattern more. We actually made a forecast on that pattern that it's going to be this pattern, and it turned out that that is what it did. So we're not going to change it in the middle now, unless we have enough reasons to change it. Now there's a rare chance this becomes a running flat. This here becomes a running flat because this has more correction. This was not that sharp, but relatively sharp, and this one could be relatively sharp and you could still drop. So where is the sell? Go on to 15, and yeah, we'd like to sell it from this point, but now that it's gone up, I can sell it from this point. Now that it's gone up some more, we can move the entry order. Remember, this is an aggressive trade. It's breaking out, but that is irrelevant. Just breaking the line is irrelevant because the line is not there. We're just putting the line for guidance, right? Remember, this is the chart doesn't see your line. It doesn't care what you have in it. You can put as many lines as you want. The market is not going to go and say, oh, well, wait a second. He has a line there. We have to stop, right? Those lines are just to guide us, right? They have very little significance in the market. So anybody would tell you, hey, you see my support or my resistance here is going to bounce off, or it's BS. The chart is not bouncing off anything that you put on it. You can put whatever you want. It's not going to bounce off or break. Would it accidentally stop at any one of your points? I can tell you to stop at any given point you put. You put a line anywhere on this chart, you can just pull it like this and you would find it. Oh, look, you see how they stopped at this piece and pull back? You see how they stopped here and go back up? And it doesn't matter where you put it. Oh, you see how they stopped at this one and go back up? I can shut my eye and do that every day, all day, because that's nonsense. Whatever you put on the chart is only to give you guidance based on the method you're using to understand what it's doing. So we're looking for patterns and we're saying, okay, is it really breaking out of this pattern? Well, give us consolidation. Prove the breakout, give us consolidation, we'll buy. Remember the concept. You guys have to keep focused on the concept. 1, 2, and I want the third one. All we have is 1. You couldn't buy this one, but this one is still within the structure. So you think this one would stop here and drop. So that's not a buy. But if it's breaking out, give me 1 here and we'll buy it. See, without that, you can't buy. You don't know what it's doing. So we wait. I still like it for a sell. I still think it can drop. So we'll still leave the sell for now. Pound Swiss. We sold this yesterday, I think, and I can't remember where we sold it, where we closed it, but I think you would have closed it either for break even or small profit. It doesn't matter. We got a nice running flat in here now. And we're consolidating here. I actually like this drop to break this low. So we'll take that trade if it happens. If this goes higher, we'll figure out what it's doing. I don't think we're going up. I still like this. Remember, we told you when this was dropping, I said we wanted to go back up there and then we expected to drop. We did buy it to the upside. Now we'll keep it to the sell. Take this off. That is already over. So I still think we can come and break this low before we go back up. Let's see if that happens. Franc and CAD. We're waiting for a sell here. I think it went up, so good. We're expecting this to be the flat. And if we're right about it, it should drop, right? That should drop, which means we're going to put a sell here. Now, you don't really have to sell it here. That's where, if it drops right now, that's the sell, right? Like this. See this? You can put it here. But if you get a flag earlier here, you sell. If we get a flag in here, we'll sell it. See this? drop, go there, drop. So if you do this and you do this, what a chance you're going to repeat it. It's not that difficult. Sometimes it looks difficult, but it's pretty simple. Can this go back up to the top there? If that goes, we take out the sell and we relook at the structure. If it goes that high, we'll take it out, we'll relook at the structure. Let's go. Pangos, I would not be in the trade if it goes that high. So Pangos, you notice we have this green color, and that means we're looking for a buy setup, not a bias yet, but a buy setup. And the reason we didn't buy this is because we have this, and there's a chance that when this goes here, it's going to come back here, make a flat, and then go. Now you can buy this if you want, but there's very, very high risk that it might not go very far. It could do this and then come back here and then go, and that would be perfect. But it could also just break the top, drop here, and then go back up. So this is the unknown. Now I don't trade the unknown, I trade the ones that I know. So I'll just leave it. And if it pulls back here, perfect, we've got a buy setup. See? That would be one more to the upside. We know where this is going. We think it's going to go. So we put this. We made some change in this pattern. We were looking at it, whether it's one big pattern. It turned out once you break the top, it's no, that was a separate pattern. You go back to the 1 hour and we're in this here now, right? So we have a sharp wave here, 1, 2, 3. If this is making 1, 2, 3, we'll take that trade. We'll see whether that's a running flat and we'll see if it drops. See, that possibility exists. So we're going to look for that possibility. But right now we're looking for a buy. Let it pull back, we'll go for the buy. So today you will see us take the trade, which means we want this to pull back first. We want this to stop there. We want it to pull back. We want it to retest this low. And then we're going to put this and we'll put an entry over there and we'll be going for that trade. See, let's go. Aussie CAD. It's a sell. I think this one is easy. You don't have to, you can put it here if you want. You can keep it here if you want, just a few pips. It doesn't make a big deal. It's not a huge move up. New Zealand CAD, we're waiting for this to make, this is not a consolidation. We wait for it to consolidate. New Zealand Swiss, not a consolidation. Wait for it to consolidate. Okay, it kind of went up already. So you can make an argument for a small one, but I prefer them to consolidate more. I want to see more consolidation here, and then we'll take this straight down. Natural gas, it kind of dropped. You're making another consolidation here, right? So the bigger picture is they'll go lower. I think this is going to go lower. Go back to the 4 hour. Yeah. There's a good chance we're coming back down for this. Remember when I was saying be cautious of the buy if you get it because it can come here. So if this turned out to give us a consolidation like this, we'll start to sell it down. Now, do we have a consolidation there in the 1 hour? No, we don't. It just started. You kind of get an impulse up. You're getting a sideways move here. You're getting some sideways here, so they could work their way down here a little, go back up there. And if we see this, we'll sell. US oil. So yesterday we said it could do a few things. It could go back up like this, then drop, or it could consolidate here and then drop. So it consolidate. Once you see the consolidation, you sell. This is not a consolidation as yet. That's just 2 candles. But if it consolidates here again, we'll sell. It means that is a smaller pattern we're looking at, and we're coming down. The sell is a good idea. It could go quite a lot. On the big picture, we could go down quite a lot. That could be the top. And on the big picture, we could literally come back and retest this low. In the big picture, this could literally come back all the way to this low here. Well, not this low. I think 20 was the low. The low was somewhere here, 20. Because this was the thing. So I'll put it somewhere around 21, right? So this is the contracts. Those were the rollover contracts. That has nothing to do with price of oil. Price of oil is never going to be zero. Right? It's not like you can go and you can buy contracts for zero. These were rollover contracts where within a couple hours it fell and you went back, right? So that's a whole different thing. That's not the real price of oil. So there's a good chance that if we're right about this, this could drop much more back to this low and then go back up, right? I think all of you have seen a pattern like this before. That's one possible pattern. Now, is there any reason in the world why the powers to be would want oil to drop? I think we all know the answer to that, right? So If the market is normally being manipulated, can the powers to be manipulated to make it drop? I think they can. Now, if that doesn't happen, then what happens next? If that doesn't happen, then this happens. And this goes there. I don't think they want this to happen. It's not like anybody wants it to go to 200, right? I think there will be a big war to make that don't go to 200. And I don't mean physical war. I mean oil war. You're going to see people getting calls to produce more oil, and they will do it. Because if they don't, they know what's going to happen. So we're looking at this as the correction. Sorry, wrong one. Correction, and we're dropping. This is going slow. I don't think it's going to go fast, but it could keep going. So we'll see how far that goes. We'll sell until we see that it's no longer going and it's turning. So right now, every flag you get, you sell. Wait for a flag, sell. Remember, these were sell setups for us. So it's going slow. So you might have to get in, get out, get in. Don't keep it. Do not keep this overnight. You can get a big surprise. And the surprise can go both ways. You don't know which way that surprise. I just showed you, you can go both ways, right? You don't want to get into any of those surprises. Take it, get in, get out as fast as you can. So UK oil, this one is closed already if you're here because it's more than 1, 2, 3, 4, 5, 6 hours. Close it. We don't have an entry here as yet, but let this consolidate and we'll put an entry there. So I'll say we would call it mostly a flag in the making, if you want. S&P 500 dropped perfect as expected, dropped to this low. Remember, I told you, once it dropped, it starts to pull back, go on a lower time frame. That thing starts to pull back, take it off because it will go back up. I literally told you it will go back up. Now we were expecting 1, 2, 3 up. It didn't do 1, 2, 3 up. It did 1, and then it actually dropped again, made a consolidation, drop again, making consolidation. You realize we're trying to sell that consolidation, but here's the thing about that. That consolidation could drop here and go right back up. So you'll have to manage this very, very close. We're looking for one more up like this. You got this 1, 2, 3, 4, 5. It can go back up like that, make a running flat, drop one more time, right? Drop one more time. It could make another flat, drop again if it wants, or it could start to reverse here and make this. So eventually we're going to get that flat, but it might take a while. So this could make a flag drop. You could make a flag drop. You could make a flag drop. You pull back like this, give us this running flat, drop again, pull back, make 1, 2, 3, give you that running flat, and then drop. Those are possibilities. So we take the sell and we see which of those possibilities develop. We're selling from the top. We sold that. We sold this. We sold this. We sold this. This one we bought break even. I think we start selling this one. We didn't get that. We're selling this one here now. Let's see how it goes. Any big drop we want. So that's a sell. Same here. I don't have to explain it. Same here, same here. Right? The same explanation. All our sells. Let's go. DAX. DAX is a good sell setup. You can take it. If it goes higher, take it off. But right now it's a sell. Nifty. Okay, Nifty is going sideways. So somebody asked a question on Nifty yesterday. 1, 2, 1. Remember I was saying what you're doing here, and I've said to come here, make a flat, and then it's going to go back up. And when it gets to this level, you have to be careful because it could do 1, 2, 3, make a flat here, and then that's total upside. But you can try to buy this as well and get that to break even. It's a very small trade. So if it doesn't go, you take it to break even. But can this be the one that actually takes off? Yes. It doesn't have to make the complex pattern I just showed you, but the possibility of that complex pattern is there. See? Okay, you guys want to go through all the cryptocurrency. I can tell you what they're doing. They're all dropping. Like we forecast, they're all dropping. They're dropping, and they haven't made the new low as yet. So it's, to us, it's useless unless we break the low. When we break the low, then we come back and we start looking for buy setups. I'm not interested in sell. I'm not selling them. Just like you're not buying at the top there, you're not selling at the bottom here. It's dangerous. You might be stuck with a sell and watch a big spike happen. Right? Don't, unless you can get in and get out really quick. And if you can do that, you don't need me to tell you anything. You can do it without me. Right? So we'll just wait until they come. So doing them now doesn't make sense. Now that we have completed that, normally we will stop the recording and we'll look through trades again. We'll mark them, and then the next session we'll record again. And traders will have updates as we go. But since we're recording this for general public, we'll keep the recording going. Tell me what other charts you want me to look at. We looked at them all this morning, but you can tell me what other ones you want to look at. Is there a trade set up on this? You send the same charts to me again. Oh, to do it. Not now. Let's see after we finish the webinar, at the end of the webinar. You will have to tell me which one, and we'll look at it from my charts. Right, tell me which one. Aussie Swiss. Aussie Swiss. Okay, no problem. Aussie Swiss. Aussie Swiss. Let's see. We're trading now. Yep, sell setup. Go for it. So remember, we sold this on the 1 hour yesterday, but we closed the trade. We sold this here yesterday. We closed the trade already, and we're waiting for it to make another consolidation here, because now it has to prove whether it's going to break out of this structure or it's going to go back up. We want to know, is this going to go back up or is it going to break out? So any consolidation here would be a sell. It's consolidating very, very small. Let me see in a 15 what it looks like. We actually have a flag here. You can go for the sell. There's a small flag forming here in the 15. You can take the sell, but be very, very careful, right? Because you don't want it to tag you and start going up. It will break this, but put an entry a little lower and go for it. So this could break out and break through the structure. How far is that from the low? Let's see. Let's put the low. This is the low here. Oh, that's a lot. So you can put an entry there for a sell. Treat it as a very short-term trade. It's a very aggressive sell. You'd have to get out really fast if it doesn't go, right? So put it as a very aggressive sell. And let's go. We mark the sells, right? Depends on what we think it is doing right now. How do you determine a flag? A small correction. That's all. A flag is a correction, but on a lower degree, a 15 minutes very small flag or a 1 hour very small flag, that's a flag. I think yesterday we did that, right? Somebody asked a question yesterday. I actually showed it. Somebody was asking me if there's a flag in there, and I showed you. It's a small correction, basically. You don't have to look at the internals, but it's good if you understand it. Right? So basically, I would look at this as a flag. That's a flag for upside. This is a flag for upside. This is a flag for upside. This is a flag for upside. It has to do a lot with the direction you're going, right? It's like if you're going up and you got some consolidation, you can buy. Put it that way. Sir, we'll get to know what correction is near to end or over after crypto make new low. When it makes a new low, we will wait for it. You wouldn't get a sudden spike. You'll get an impulse, you'll get a flag, and then it's going to go. So we'll do that. We'll wait for that. We'll wait for a 1 hour or a lower degree impulse flag and then take the trade. We did it already a few times. So it's not a problem. We'll do it again. You'll see. We'll probably be able to do it live in front of you. Or if you join us, you'll get the, well, you're already in the group. You're already in the program. So you're getting it. You will get it twice daily. You would know when it's happening. Right? You already have 3-month subscription. So, okay, let's go. Anyone else? By the way, do not take the subscription as yet. We still have to settle something out with transfers and all of that, and then don't take more of the accounts, because I'm trying to get in contact with them to settle out something in the accounts and I can't. So when they contact me, then I'll let you guys know if that is working. And that's why I don't like to do anything with anybody, anytime, anywhere. In general, I don't do that. I don't promote anybody. I don't do it. You know how much offers I get for promotion? Every day my email is filled with them. But this one with the account, I was like, okay, this will help traders. And turned out I don't like to get involved with those things. I think I wouldn't get involved again. But I like the idea that traders can get money to trade, because I know a lot of you have very small accounts. And if you can trade well, you know, it's going to be nice if you can get a bigger account. We'll have to figure out some other way to do it. Euro USD trade running flat under 1 minute. Don't trade under 1 minute. Don't even trade the 1 minute. You're going to break your account if you do that. There's no need for you to do that. It's just trade the higher time. Trade for this move to go up here. Don't worry with the internals of what it's doing in the 1 minute. All right, the 1 minute chart completes its pattern really quick. So you will confuse yourself if you try to trade it. Stay on the higher time frame. Let's go. What else? Any other trades you guys want me to look at? Any trade setups? Can UJ touch 150 level before getting into sell? I don't care. It's possible. Right? I don't that the number is irrelevant. It's possible, but that's not how we look at. Don't look at charts in terms of areas or numbers. That those are irrelevant to the market. Look at the patterns. As soon as you get a sell pattern, take it, regardless of where it is. Can we look at silver? Yes, sure, Ivan. Silver, let's see. Expanding. You mean with this one? Yeah, we could probably look at that as an expanding here, but we need a flag. This is just 2 candles and the 15 and the 1 hour, you wouldn't even see it. See, we'll need a flag first. If we get a flag, you guys take it. I mean, you could take a 15 flag too, but this is not. It's just 3 candles, right? This is like, actually, it's 2 candles, 1, 2. So let's wait for a flag. If we get a flag, we'll buy it definitely. Because it can still be a deeper correction within this impulse, right? Within this impulse. It hasn't even reached 50%. This is for as soon as you get in, it starts to drop, come back here, go back there, and then drop. So that's weird. Can I check this shirt? Hi, where are you from? Where I am from? I'm from Guyana. Do you know where Guyana is, by the way? Somebody asked me where I'm from. I'm from Guyana. Do you know where that is? I think everybody, my idea is that a lot of you already know where I'm from. I'm waiting for your answer if you know where Guyana is. This one, 1, 2, 3. It possibly could be that, but it could be more complex than that as well. Right? It's not a fact that it will stop here and go back. Who says it doesn't come here and then go back? You follow? The idea that you think it's going to stop here and go back up is wrong. It could come here and then go back up. And it will still be 1, 2, 3. Go back there, right? And then drop and then go back up. So it could be more complex than that. But I like your thought process. You're seeing patterns, right? So that is good. But you have to know more variations of the patterns as well. Do this last chart. Which last chart? But that you didn't send a chart. You just said, please do this last chart, but I don't see any chart attached to it. Oh, you didn't know where I was from? Oh, I lived in Moscow for the last 30 years. I'm living in Dubai for the last 5 years. So 30 years before that, I lived in Guyana for 17 years. I lived in Moscow for about 20 something years. And I lived in Guyana in Dubai for 5 years. Basically something like that. I live more in Moscow than I lived anywhere else. Yep, from the Caribbean. My great grandpa, I don't know, 3 generations back was from India. During the British colonial days, they were taken to the Caribbean. So ethnically, I'm an Indian. Nationality, I'm Guyanese. I live all over the world. Basically, I don't really give those things much thought. I don't really care. My wife is Russian. My children are somewhere between. I don't know where the hell they are. Right? They're somewhere between there, but they have Russian passports. I'm somewhere between that. I don't pay attention to that. That it's really pretty much irrelevant to me. And I'm not saying that just because. I'm saying that because that is who I am, if you know me. I have friends from all over the world. I studied at the university. We were 100 and I know not 100. I think about 90 something different countries. Students from 90 something different countries study there. So I pretty much I'm international. I don't really. I think if you spend too much time on those nonsense, you're wasting your time in life. Just we're all human beings. That's just basic it. And that's really nice. Was a question. What was the question? Can you repost? I missed it. Let's go. Come on, any questions? Let's go. Let's take questions. Any charts? By the way, we're trading, so let's go with charts. Let's get some charts going. Let's get some charts going. We can take a lot of, oh, this one, this one. You want me to take a look at this? Let's see. So this was what? That was oil, right? That was oil when? Oil, I think we did the oil chart already. WTI on the Wanda. WTI would be the US oil, right? I think this chart you're looking at, right? The US oil, this one. What time frame was that? 1 hour. And when was that? You have to give me time frame when you're looking at it, then so I can get 1 hour yesterday, US oil. Let's see. You're talking about this piece. Where is the 1, 2, 3? Oh, you're talking about this piece here, right? This 1, 2, 3 up there. Let me see that on the 1 hour. So basically, I'm looking at this chart like this. Right, this was the move up. There were a lot of running flats there. This drop, it made a correction, drop, made a correction, drop, made a correction, drop, made a correction, drop, made a correction, make a smaller one, drop, made a correction, drop, made a bigger correction. All I'm seeing is just corrections, nothing else. If drop made a correction, we're selling again. So this here is a separate one of its own. That has nothing to do with any one separate. This here is just a bigger correction, right? This is a smaller version of a correction. If you're talking about this internally here, oh, you're talking about this piece here internally, how we would look at this. I would look at this, you're talking about this one. I see you're talking about this one, whether we put this with anything. No, that would just be a lower degree correction. You will put this, if you go into that, those are, when you see something look like this, they're actually lower degree corrections. So you can go here and do this. See that? That's a lower degree corrective structure. See how it is? But it's a lower degree one. So you don't, I will ignore them. Ignore the single sharp moves because it is a lower degree correction within the impulse. You will find a few of that every now and then. See this one here? You wouldn't see that, but if you go on a 1 minute, that's a whole flat. Coming back to the question somebody asked, right? So something like this on a 1 minute is going to be an entire flat. You're going to see up and down structures. Ignore that. When you see something like this, see it, to see how much consolidation you have in here. That's a perfect flag, but it's a flag on a 5 minute. This would be something good in a 5 minute. Put it in a 5 minute, you'll see what I'm talking about. So put it in a 5 minute, go backwards. We look at that, see structure in there, but we don't look at them. If you see one single sharp move on a 1 hour and it's not getting the other part of it, it means that was a lower degree one, right? You get to move up, you get a flag, you get to move up, you get a bigger flag, you get to move up, you get a smaller flag, you get to move up. All of that is one corrective structure for downside. See, this is the impulse. That's impulse. This is impulse. But because it's so small, when you go on the hourly, you see it as one move up, right? Ignore them. You will have a few of those in the charts, ignore them. That's a lower degree one. If you don't see a bigger flat, just assume that, well, that's a lower degree one and it's gone. Don't focus too much time on it, right? Just leave this. What you normally do when I see that is if you get a flag after that, sell the flag. So you get a flag after that, sell the flag. Don't focus. If you don't get the second one to it, assume it's a lower degree one and move on. Can you check Apple? Okay, we can do that, sir. FVG fair value gap is a good target for some trade. We look at that just now. Can it form a part of a running flat? No, not now. It could in the future. You would probably think of that. Good. By the way, I would think that maybe it could make a running flat with this. But once it's gone, once you get this and it's gone, you're not going to get. There's a flat. This one is a consolidation here too. So sometimes you get that. You just assume that that is a smaller one. You will find a lot of them single ones in the chart as you go along. So Swiss has dropped, CAD is coming down back, but those flats are now going to tell us whether they're going to. If anybody took the aggressive trade in the sell on the Swiss, you want to close it right now, right? Or move your stop really tight in it. Let's go back to the two thing. Apple, I think somebody wants Apple. So let me look back at Swiss. We're going to look at those charts afterwards. Let's look at Swiss because it's going to give us a setup now. Swiss. So it dropped where we wanted it, right? So either this now here is a flat, either this is a flat and it's going to go back up at some point, or this starts to drop really sharp. Now, if you took the aggressive trade from here this morning, my traders, if you took that aggressive trade, you have to move your stop really, really, really tight. because this is the point from where we can go back up if we go back up. If not, from this point, we don't go back up. Any flag here becomes a sell. Right, that means it's not making the running flat we have, and we'll have to go back up. So I'll take this out. That is useless now. See how it works? We were here this morning and we said, you know, we have this, so let's get one more down. We get it now. The question is now, is that a running flat? You don't have to know that it's absolutely a running flat. Maybe it's not. Maybe this is a contracting flat, right? The assumption is, if you look at it, can this be a contracting flat and that is the top? Sure. If you took this aggressive one, you're doing well. We don't always do that. My traders, some of them might have taken it. We had it in this one, and we had it in the CAD. Because this could stop here and turn, you'll have to take break even. But guess what? If it comes here and makes a flag again, we sell it to break test this low. And then we will go with that correction. And then upside. See? The CAD is the same thing. CAD, we're expecting CAD to come down more, so CAD actually came here. You closed it, it went back, wait for a flag, you can sell again. Which means if CAD makes another flag here, you can sell this to come here and then expect it to go back up. We'll still go with this flat for now. We haven't excluded that flat as yet. And this is where patterns come from simple to complex. This is how the complex part develops. And this is why it's going to be difficult for some of you if you don't know all of this. If you know, with time and experience, you would learn it, of course. You can fast track that learning if you want, but with time and experience, you will learn it. So now we're still in this consolidation, right? Basically, do I think this is the one that is going to drop to the bottom here? Could it possibly that this running flat just finished here? This was the top, and now we're dropping to this level, and this is 1, 2, 3. Or you could even put this piece with it. Is that an expanding flat? 1, 2, 3. Yeah, possible. If this is coming down, guess what we need? We need a flag here. Any flag we will sell. And then when it comes here, we'll close. So what you want before it reaches here, you want a flag. But if it reaches here and make a flag, no problem, we'll still sell it. So let's see now. Any flag would be a sell. Shall we see this? It's not that complex. It's not that complicated, put it that way. It's complex, not complicated. Okay, euro is back at the top, so we'll see if euro turns too. So the euro trade, you have to get that into positive. My traders, you have to put that into positive, because from this point here, once it breaks that top, if they want to drop, they're going to drop. Remember, we're not taking it for this trade. That's not the point of the trade. The idea is if this breaks out. Good for us if it breaks out, right? Can it go higher? Yes. What's your worst case? Your worst case is you get break even. So we took this trade this morning with the knowledge that it can become a break-even trade. And with the knowledge that if this takes off like a rocket, we will already be in the trade. That's it. Now you manage the trade. You can't lose in this trade. No matter what happens, you can't lose in this trade. Isn't that amazing? You go to the casino, you're playing, you put your money down, and you said, okay, if I win, I get the money. But you know what? If I'm wrong, I get back my money. That is why this is not a casino. This is a business. If you're wrong, you can get back your money sometimes, which means if this doesn't take off like a rocket, we get break even. Not many places, if you're wrong, you will get back your money, right? Agreed with that. I don't care what business you run. In most business you do, if you're wrong, the chances of you getting back your money is rare. Retail business, yes, you could probably sell it for the cost you buy it. So you bought something, it's not selling so good. You cut the profit, you sell it back at wholesale price, and you make back your money, right? That's okay. That's the kind of business we're doing here. You're wrong, get out. You're right, it will go. So, okay, guys, I think I would leave you with that thought. It's a good place to leave you guys. Smart money concept along with wave gives some good entry points. Smart money concept. That's the dumbest thing I've heard for the day. What is smart money concept? Is there any stupid money concept anywhere? That is some hype somebody sell to you. I warn you, don't get along with all these hypes you're getting on the internet. Smart money concept is just something somebody wants to sell you. So they said this is where smart money put their money. How the hell do you know there's smart money? Who knows there's smart money or stupid money? Is money, right? When they say that, people who use those concepts, they're using it for hypes, right? Smart money there. Let's put our money where the smart money is. Yeah, how would you know? How would you know? Like, it's like, let me leave you guys with one more thing before we go. You know what they always say? Put it on the euro. And this is something all of you heard. Buy at the low, sell at the high, right? So, okay, euro is at the low now. It's at the low on a weekly. I can guarantee you it's at the low on a weekly. You can, this is not even debatable. This is the top. This was a low, this was a low, this was a low. We just made it low. How many of you buying euro right now? They say buy at the low. Buy at the low and hold it. How the hell do you know that is the low? None of us know that's a low. You see, that's the thing. They tell you something, but they don't tell you how to identify it. Buy at the low, sell at the high. Where is the high? Where is the low? They don't tell you that. You don't know that. It's easier said than done because it's nonsense. Right? Hindsight, they would say this is the low. So if euro turns from here and do this, hindsight, they will tell you that was the low. But you don't know, this didn't turn out to be the low. This didn't turn out to be the low. This didn't turn out to be the low. Right? If you're thinking of bigger structure where you buy at the low to go sell at the top. And that's the thing about it. If you follow all those things on the internet, they're misleading. I will show you something a guy showed, and this guy is from a hedge fund. I don't want to call the name because it will look a thing, but he's from a hedge fund, and he says, he's drawing and he's showing. He said, well, you should not look at trend lines because they're irrelevant, right? And he was drawing something like, I don't know if I ever wanted to. So he was saying trend lines always get broken. So he took a chart like this and he did this. And he said they would tell you that when it come back to the trend line, you can buy, but look, it broke the trend line. And I'm like, dude, no, that's not how it works. Right? Trend lines are irrelevant, I agree, but what he's showing, what they want to show you is like magic. They're telling you just general things. It's like fibs. And trust me, I know how to put fibs. That was my go-to thing, fibs, until I figure out that what if I move these fibs around? And that's the thing about testing. When you're testing something, change it around, move it around, put a control to it, and you would see that most of them are just hypes. Patterns are there. These are not hypes. You can literally see them. Right? You can see these formations, you can see these patterns, you know they exist. Now the point is, can you take advantage of it? That's all. Due to the increase of usage of algo trading, price spikes are increasing. How to deal with that? Don't deal with it. Don't just trade what you don't know. Forget about the spikes. If you get a setup for a buy and it spiked in your direction, congratulations. If you don't get a setup for the buy, don't take the trade. So if you ignore that, if you don't focus on outside things, it will not bother you. If you don't get a setup and it spike, then just let it go. Don't trade it. That's all. I bought you at 98,802. 98,802. So you bought euro where? There. 98.8. 98.8 would be somewhere here, right? 98.8. Somewhere here you bought, right? Basically. Maybe I got lucky, but after the ABC wave structure account to my accounts completely, I entered through FVG concept and it worked today. I have no idea what is an FVG concept. You bought there, you got lucky. That's the thing you said. You said maybe I got lucky, and I believe you got lucky. If you bought it here, you got lucky. Because where was your stop? Your stop was probably here, right? Nothing says it couldn't do this and then go back up. Nope, we don't know for sure that it's an ending diagonal. We can assume that, but we don't know that for sure. But it looks like an ending diagonal. I'll agree with you. So basically, you can buy there if you want, but you're taking a very big risk. It could have broken lower and then take you out and then go back up. Counting 1 minute wave is easy in Euro USD. Counting wave on no time frame is easy, much less the Euro USD under 1 minute. So here's the thing: if you have the skill level to count wave on the 1 minute and it's easy for you, you're really great. Just keep it up. Don't stop doing it. Watch your account though. Don't trade live in it until you've practiced it for a couple of months on the demo and see what the results are. If you can do that, it's good. I'm not saying they're conks in 1 minute, but if you can do it in a 1 minute, that's really good. That means you have a very high skill level in patterns. Test it in a 1 minute, test it in a demo for a month or two. And if that works, good for you. You never know, you might have that strong nerve. Somebody said you're gonna have a nervous breakdown due to the 1 minute. And that is exactly the point. It moves so fast that your heart is gonna die. But who knows? We don't know if that person has a very strong heart and a very strong nervous system. In that case, we don't need to worry about him. He'll do well. But like the only advice I can give you is test it on the 1 minute. Test it on a demo first. Do it for like 3-4 months in a demo. And if it turned out after 3 months, you're good, be my guest. I don't advise my traders to go lower than the 15 unless they have a very, very good skill level and they're good at it. We have traders who trade lower, but they're good at it. They know what they're doing. Right? Traders who trade, no, you can trade anytime. You don't have to be sorry. You can trade anytime for him, you can. I don't know the skill level of any one of you in here, right? So, okay, guys, just my warning. If you're new, don't do that. If you're new, stick to the 1 hour. Unless as you develop skill level, you can go to 15, you can go to 5, but you have to get to that level first. Thank you guys for coming. Let's double that. We had about 50-something people this morning. Let's make that 100-something this afternoon. Bring a friend. I think all of you have a trader friend out there that you can find. Share the link somewhere, invite somebody, and I'll see all of you. Take care. Trade with care. Bye.